about that tonight, you need to contact the like main company. This is something that I just do personally. So I don't have nobody. There's like literally no support. It's just me right now. So I do this every week on Sunday evenings, just personally. So just contact like Brent or Andy or anybody, and they'll be able to help you with those sessions and all that. So okay, perfect, good. Everybody said audio video is good. Let's get things rolling here tonight. We got a lot that we're going to go over here, a lot that we're going to cover, a lot that I plan to take a deep dive into. So let's get it going. Before we begin, got to let you know, not acting in my capacity as a licensed financial professional. I'm simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And then, guys, if you take any of the trades, just know you're taking those of and on your own volition. Myron, are you in here twice? In? Yep, you are. So Myron, you're in here twice. That's why. Just close out one of the tabs that you're on. Sylvia, no, it cannot. Mainly because if somebody wants to type something private to me, I want to be able to read it. Plus, I don't, you know, Sylvia asked if the chat can be open for everybody and like everybody can see it. But no, I don't do that. Mainly because like, sometimes there's nasty people out in this world, Sylvia. And then if somebody types in that, if like they type in their email or their phone number or something like that to me, I wouldn't want yours shared with everybody and all that. Let's see here. Anybody's first time in this session? Type in a MUI or yes if it's your first time in this session. Just really quickly. Rommel. Great. Welcome. Christian. Jerry, thank you. Leon, I didn't even get anything from you on that. So, all right, perfect. Well, good to see. For all of you guys in here that's new to this session, thanks for joining us. I know you guys could be, you have the ability to be anywhere you want to on a Sunday evening, and you're here with me. But I mean, where else would you be? The Players Championship is over. But I just want to quickly introduce myself for those that don't know. Been in trading and trading education for 17 years. I'm the founder of a individually managed fund. Our managed fund does quite well. I'll actually share a little bit about it here as well. So far, I need to update this year's as well, but right now, as of 24 from 2014 to today, we're up about 259% or about 25.94% per year. If you take our actual returns through today, if you invested $250,000 with us back in 2014, as of today, you would be sitting at $2.3 million. And not everybody qualifies for this 100%. So, we'll talk about that one-on-one. We'll talk really well. Sylvia, we're doing really well this year. I also own a retirement estate planning company where when things happen, like some of what I'm going to talk about today, is there are ways that you can invest, and just show of hands, yes or no, how many of you guys know that there are ways that you guys can invest without ever losing a penny of that return? VJ, goodness gracious, brother. I'm glad to see you are back. I thought you were getting back in January, and then I was like, man, I was literally thinking about it today. I was like, I haven't heard from VJ. So I hope that that you are doing well, buddy. We got to get connect. No, not referring to prop firms, not referring to anything like that. So look, I will definitely tell you guys more in this presentation, and then I'll give you guys a link where you can book appointments with myself and my team. I also have my MBA in finance and global portfolio management, and working on my doctorate in finance and economics as well. Jerry, I don't even know how to start closed captioning on Zoom. um, I don't even know how to start closed captioning on Zoom, so I'm not sure how it ended there. I do apologize. I don't even know if I set that. I didn't set that up. So, but that's just a little bit about me. Couple of quick housekeeping items. The first is Wealth Watch, and I am actually going to send that to you guys for those of you that didn't know. So, what is Wealth Watch? And there's going to be another one that I'm doing as well. And I want you guys to be a uh Jerry, that's on your end. So closed captioning is on your end. The Wealth Watch, what that is a, I break down this, I break down and give you guys stock picks every single day. They're I say 1 to 3 minute videos. Let's just be real. It's like 2 to 4.5 minute videos when it comes to me talking. But this is a newsletter that comes directly to you. All you got to do, guys, let me just send this out to everybody. Is if you want to register for it, click that link and get registered. You'll also get my fundamental playbook. These are the 10 most important fundamental news announcements that move the market. And I even break down like what to expect if it is bullish or bearish, and how to use it, how to use the fundamentals to your advantage. If you've been in any of my fundamental trading sessions that I've had over the last couple of months, we did 2001, 4000 and another, 2000 and another, just in the last 3, and we'll probably have one coming up this week as well. But these tools are phenomenal, and understanding how fundamentals move the market is imperative. And when I bring you a stock, I bring you what's moving it fundamentally and what's moving it potentially technically as well. So sign up for that there. And then the other thing that we have is Discord. My man Freddie posting stuff already here today. I love it. And then Doc here said Intuit had a nice 100-point bounce off the bottom. Absolutely, it did. Some of these companies are going to stay around, and some of these companies are going to be gone. Right? That just is what it is. So we'll be looking at those in over time, and I am going to let's see. Let me invite you guys to the channel. Now, I will tell you, this link is only good for 7 days. So once it's after 7 days, can't use this link. So go ahead and sign up now. You can register. It's a free channel. It'll always be free. Things like that. Placing a options trade in futures in Thinkorswim. Rommel, I don't use Thinkorswim. I haven't used Thinkorswim for about 9 years now. And so I can't, and I don't even have I use a Mac. I guess I could, the web-based version, but Jerry, after you sign up, you don't have to do anything because you're already in the Discord. Once you sign into Discord and join the channel, you're good to go. You don't have to rejoin every week. So it's good to go there. So Freddie is adding some other trades. So welcome to you all, and thank you guys so much for that. That gets those 2 major housekeeping items out of the way. Next thing I want to jump into to get us started is this week's fundamental news announcements. Monday, we have industrial production numbers. Tuesday, pending home sales. Wednesday, the producer price index, which is a precursor to inflation. And then Wednesday afternoon, we have FOMC interest rate decisions and economic projections with the speech by Jerome Powell as well. And then on Thursday, initial jobless claims and new home sales wrap it up. And I see somebody already took a picture and posted that for me. Thank you guys so much. Big news, around FOMC. Do I think they're going to cut? More than likely not. We can actually take a quick look at that if we want to. This is the CME Group survey that posts whether or not they expect a rate cut or not. Current rate is 350 to 375, 99.2% chance of holding rates. So you're telling me there's a chance that they will cut, but no, they will not. The more than likely they will not cut. I don't anticipate a cut for any time, any length of time, especially after what we saw this past Friday. Talking a little bit into that, worse than expected GDP, worse than expected inflationary numbers, and then right and then um other announcements that we'll dive into here in a little bit. Then next thing, big the major companies that I'll be paying attention to. There are a ton of companies reporting earnings as well. Right, a ton of companies reporting earnings this week. Freddie, I would be very careful on what you share because you can be on the hook. I'll just say that. Just FYI. Okay. And this week's fundamental are this week's earnings. The ones I'm paying, major ones I'm looking at: OKLO, General Mills, JBL, Micron. We have Lululemon. We have Darden, Accenture, Alibaba, DocuSign, Dollar Tree, Tencent. There are some other, others as well, like Macy's and FedEx and let's see. Anything else really stick out to me? That's about it. But the ones that General Mills and stuff like that, but really the ones I wanted to focus on are right here. So, let's see. Now, let me do this over. Perfect. Now, before we go and jump on into charts, a couple of things here. Okay. One of the interesting things that I'm going to share with you guys two charts of two different kind of economic cycles and then kind of a macro cycle as well that countries experience, I'll say. Okay. And so this is an 18-year internal US cycle. Okay. And this is kind of just how it all plays out. Every 18 years, we see these cycles, and this is kind of a constant repeat. And, we experience these euphoria movements and there's people that think that nothing, the market will only go up. And it's like I say all the time, people make a lot of life decisions like they're going to live forever. And they forget that, it's finite. And the same thing with markets, right? Warren Buffett and Benjamin Graham both have said when everybody's buying, you should be looking for your exit. And when everybody's selling, you should be looking for your entry. And that's something that I think is very important. So in the first 7 years, right, you have a boom and then you have a little bit of a pullback. And this happens in real estate. This happens in all kind of markets. Then you'll end up with a commodities boom. And then this is where the very easy money, this is where money starts to get a little more difficult to make. This is money in the markets. This is money in real estate. This is money in really any kind of investment area, right? Think about it like in 2011, if you would have bought a cheap house and a fixer-upper, and you did some cosmetic work to it, not even some major investments, 2, 3, 4 years later, you could sell that house at a premium. Today, you go to buy that same cheap house or that same house, and you're like, I don't know if I can make money on this or not. Right? I don't know if I can make money on this or not. And then you enter in this era of kind of euphoria where people are like, the market's just going to go up. It's, nothing's ever going to make this thing stop. We're going to the moon. Nothing's ever going to impede growth or anything like that. And then what you have happen is the correction. And that lasts for about 4 years or so. Now, some people forecast that this would happen from 2026 to 2030. And if you look at something that's called the Benner cycle, how many of you know what the Benner cycle is? Yes or no? Okay, so the Benner cycle, it's a Very interesting. Um, instrument. This was a prediction from Samuel Benner in 1875. He predicted hundreds of years worth of markets and direction. And I just want to call your attention to this. He called these the years of the booms and these the years of the market lows. So 1931 was a low. 45, a high. 51, a low. 65, a high. He called 1999 a high. I think it was. He called 2005 a high. He called 2007 a midterm high. 2012 was the low to 2019 being a high. 2023 a low, 2026 the midterm high down to 2032, and then 2035 the next big major market high. So if we look, right, we're in that 2026 era, right? We're in this area here where we should potentially see another market low or another market correction. And with everything going on in the world, I mean, the entirety of this Iran play, and I have a very unique perspective on that. I'll talk about that in this webinar as well tonight, because I think it's important to share, just to give you guys some perspective that I think is being overlooked in major news. But this is an interesting cycle. I don't put a ton of credence into it, but it's hard to ignore when everything's been right, you know? It's hard to ignore when everything's been right. Exactly, Bryce. Exactly. You know, exactly. So it's a very interesting tool to use. It's something that's interesting, to say the least. And then the next cycle I want to talk about is, this is from Ray Dalio. This is from his book, The Changing World Order. If you haven't read it, it's a dry read, but it's a good read. If you love macroeconomics, you'll love the book. If you don't love macroeconomics, you'll probably read like the first 100 pages and then put it on the shelf to make it look like you read it. But basically, he cites 18 things that happen in a cycle, of a big cycle. He's talking almost like empire-esque, okay? You know, in the start of the empire, you have strong leadership, inventiveness, education, strong culture, good resource allocation, competitive fitness, right? Our good competitiveness up here in number 6, strong income growth, strong markets and financial centers. And then things begin to get a little bit less productive, and then things get overextended. You start to lose competitiveness on a global scale. Wealth gaps. We live in the time right now where in US history, the wealth gap has not been as great as it has been ever. Literally, right now, the top 10% of wealth holders hold more than 2x the bottom 90%. Let me just put that in perspective. 10% of Americans hold more wealth than 300 million people. On the globe, there are 8 people that individually hold more wealth than 4.5 billion people, which is wild, the concept, right? Then large debts. I don't know if you guys know this or not, but the first 15 hours of the war in Iran cost the US $150 billion. The first 15 hours. It could top $1 trillion and add $1 trillion to our debt. We're already 38 trillion. What's 39, right? What's 40 at that point? And so large debts, printing money, internal conflict, loss of a reserve currency status, weak leadership, and civil war and revolution. Now, I want to talk a little bit about the loss of reserve currency status, because there's something that's interesting. How many of you guys in here, you've seen this massive run up in gold, right? You've just seen this like massive run up in gold that we had all the way up until like January of this year, right? Like, it's been incredible, this run up. And a lot of people, right, A lot of people made a lot of money out of that. Well, I just kind of, I've always, I always like to try to find and figure out what has fueled these big moves. Like, why did it happen? What should we be looking for? Where did it come from? Anyone want to guess? Yes or no? Anyone want to guess? I've always find that the guess is interesting. Yes. So this is where it comes from. So New Order, greed. Okay, I like it. Countries switching to gold, selling dollars. There's a few things that all have come at the same time. So one, last year, I think it was last year, yeah, into last year, the US petrodollar it broke apart. It was the end of the contract where all oil had to be bought and sold in dollars. People are continuing to do it. But then last year and the year before, but really at the end of last year, this big kind of new emergent threat, and not really new, but an emergent threat to the dollar dominance really showed its head in BRICS, right? In BRICS. So, Priyanka, great to see you, right? And BRICS it's an interesting thing, but I said, well, okay, well, what's been the kind of what has BRICS done since its gold kind of ramp up? Well, China bought a couple of dollars worth of gold last year. Huh. Does anybody see any kind of similarities back and forth there? Yes or no? Do you see where gold may have shot up? It's not just us. Okay. It's not just us that said it. Well, Deborah, they already have a currency. They already have the BRICS currency is a currency, and you can transact in that currency, and they have oil in that currency, and all BRICS nations trade in BRICS, right? They trade in BRICS, and they want BRICS to be backed by gold. They said this in the middle of 2024. And I don't know why it took me so long to think about that. And I said, well, where's all the gold going? And well, you know that China is a major buyer of gold. They are dumping US debt and buying gold with their the debt that they're dumping. They're getting their rebates back, and then they're going and buying gold. And so they have a massive stockpile of gold. Now, the U.S. still has the largest amount of gold out of any nation, but their reserves has just taken a massive jump. Now, the other thing about that made me started to go in is I always like to look at like okay, we're in this war, I get it, and I get potentially why in the Middle East, and they say nuclear and this, that, and the third. But then I found something interesting when I was looking through and digging more into what's going on in China. And wouldn't you know it? If I had to tell you that there were two countries that exported the most, that they were the top two countries to export oil to China, if you had to just guess what those two countries were, and I'll give you a hint, they've both been in the news recently. What do you think those two countries would be? Iran and Venezuela. You guys are absolutely correct. Now, Russia was number three, Imran and Christian. Great job for thinking about the Russia as well. And obviously, Russia now is supplies oil to China. But think about that for a second. Now, China does also, I will say, their dependency on oil is very low, right? They've built 7 nuclear reactors over the last decade. They also have the largest wind farms in the world. They actually get 30% of their energy from wind farms. They can power like a third of their country through wind farms. They use all forms of energy: nuclear, oil, coal, gas, everything. So it's just an interesting play with oil there and what's happening. I think it's more of a manufacturing that China uses oil for, because oils in clothing, paints, everything that you can imagine. It has oil. But the other side of it is, yes, they do still need it for energy. And I just find it interesting that those are the two countries where we've had skirmishes, or whatever you want to call it, with. And we're seeing, it could weaken their economy and potentially weaken the BRICS. So very, very interesting. Let's see. Wealth gap is every time from the beginning of ages, people think that it's enormous. The same economy or market, they just grow. It's their nature. Bella, no. See, the thing is that 10 years ago, the top 10% held the exact same amount as the bottom 90%. I'm talking 2014, so 12 years ago now, right? 2014, they both held $50 trillion in the wealth gap in the US. Fast forward just 10 years or 12 years, the top 10%'s wealth has doubled and the bottom 90% has shrunk in by a third. And there's one reason for it. I will share it towards the later on in this presentation. But I want to give you guys, before we jump into the stocks that I want to look at with you guys and all of that, there's a couple of things that I want to look at as well, because I got some feedback and I just kind of wanted to provide this information. So I'm going to first start with like a basic, just top-down analysis of gold futures as well. So I'm going to go to a monthly chart. Right. It looks awfully like I swear it does look like a copy paste here. It does look like a copy paste here. But monthly chart on gold, we can see that, yes, all time high was right here. Well, all time high is now up here, 56.41. We've pulled back from those all-time highs. So you would say, where's my next level of like support and resistance? Well, it's way down here, and then down here, and then down here. Now, when I look at this, the first thing I like to look at is, okay, any pullbacks from the all-time high, how far were they? So that was 33% from the all-time high. This, at that point, was 18% from the high. This was about 7% from that little bloop up, if you will. But the biggest drop would be 33%. Well, if we go from the recent close all-time high down 33%, we would be, would you look at that? 37% is this level of support and resistance. So, and that I actually got a little, hold on, let me do the magnet tool. That is, 37% there. So 33% would be right in, and I will put this right there. That's where 37% is. I'm going to make that line red. All right. So this is a 37% from the ATH, all-time high. Now, what's the likelihood that gold will fall that low? I think that gold still has room to go up. I personally think that gold will end this year at around 6,000, because I think we're going to see more money leave the market and go into gold to buy and hold that as a safe haven, because that's the only place that safe haven exists right now. If we go to the daily time frame and look at this, and you plot your fibs from the peak high to the peak low in this retracement, and we're just measuring the retracement right now, this has shot up to a 786 pullback, right? Just shy of this 86. So where we should be going is about 4,098 if we can continue to make lower lows and lower highs, which technically speaking, we did break this inner trend line and close below it. We didn't even retest it, and it's starting to push down. And if we look at a subswing here, there to there, at minimum, I think we go back down to like 47.39. Now, if we look from the bullish perspective here, and I'm going to start my fibs just at this low, and we go there and there. This is where Josh's one-click fibs. I really need to install that. I have it and haven't even installed. This is where his one-click fibs would play in. And that to peak high So this is a 5-0 retracement. This shows 6,700. So we'll see, right? If this continues to break and this breaks down back down into there, and we see it fall down into this 4,000 or even lower, that is an interesting play from where we are. Now, if we go from there to that level, that's 27% from the all time high. So gold futures continue to be down. I do see selling energy is high in that. And in just looking in that at this, I do think that, we will see this continue to push down. Now, I'm going to use something. It's not out yet. Nobody has it yet. It's not released yet. You'll find out about it later on. But been doing a little bit of programming, and let me just do one quick thing. I gotta fix that actually. And looking at this, go daily PX. Give me one quick second here. Okay, and now let me go GC. If I look at gold futures, though, we are still in technically a buy zone. This is kind of greatly changing very, very quickly. And we will see if this does break down. This will, we did break this upward channel as well on gold. So if this channel breaks, just know that that is it is broken. Without a doubt, it's broken. If we do not re-enter in this channel in this week, then I am looking for a fall down to 4,095. Even with selling energy, even though we're in the buy zone, we're looking for a selling opportunity on gold. Absolutely would be. That is something that I just think is potentially going to happen there. There it is. That's what I needed. Okay, sorry. So I would be looking for looking for a selling opportunity here. And we will see. I think that we'll see this weakness, and I think it'd actually be a flatter week. The other thing wanted to look at is SPX. So on the SPX, we are in kind of a sell zone. Selling energy is at a high here. So I anticipate selling energy will kind of wane off the rest of this week. And I do want to just show you guys one thing here. On the SPX, if I add on an exponential moving average of a 200 period, which I'll just throw on really quickly. We are quickly approaching that exponential moving average. I talked about last week how we were, I think, 305 days without hitting the 200 period moving average at this point. So, yes, I expect it to hit that 200 period moving average at this point. This is, if we go from our peak high to this trough, that is Fib 1. This would be Fib 2. Technically speaking, we should go down to 64.15, which would break this. And from our highs down to there, that'd be about an 8% move downward. We do have some gaps in here that have yet to be filled, right? That gap down here at 56.95. Do I think that the market is going to head all the way down to there? I don't think so. I think that we will see a drop below this 200 period moving average, and then we will quickly kind of reverse this. I think it will break it. I think 64.15 is that level of support that's where I think we will see that level of support happen. Now, if stuff wanes on, if war continues on, if we see a couple other things happen, then yes, I do anticipate a further pullback in this, right? We remember last year, this time, we had a 27% drawdown from the high. So if we look at the high and we go down 20, even 21% would fill those gaps. 27%, I think, fills the lowest gap on there. Yeah, that's a 31% off the high is that gap right here. So could that happen? Yes, we saw it last year, right? We saw it happen last year. What would be different here? So keep an eye out. Be cognizant of this, but remember, trade what you see, not what we're trying to predict. Okay. Let's see. If China is buying gold, why would we think it'd be going down? Because Sylvia, it happens in phases and cycles, and it will be a little bit slower there, right? It'll be a little bit slower on that this next phase and cycle. Now, couple of stocks that I do plan to look at. One is PPTA, in addition to our normal ones that we look at. PPTA, somebody asked for AAOI, ASTS, Circle. Go ahead and type in whatever stocks you guys want to look at, and we will look at those as well. So feel free, and we'll break down those as well. NVIDIA, MU, WDC, SNDK, DUST, META, BABA, MSFT, GSAT, COP, EPS. Okay. And I'm going to knock out a lot of tech stocks all at once. Just letting you know. I don't care if it's AMD, PBS, any tech stock right now. Stay the hell away. Is that simple? Am I clear? Do you get it? Is anybody confused on that? Yes or no? Stay the hell away. Let me just, I did want to make sure I didn't speak in double entendre there. Why? What has happened in tech since October of last year? You shouldn't even type in a thing because not a damn thing happened. Okay? Nothing has happened. We haven't seen a high. We haven't seen a low. We haven't seen anything happen. Would I sell them personally? Yes. Yes, I would. I would not be, I wouldn't, well, I would say this. I wouldn't sell them, just like get rid of everything right now. What I would do is if it were me, and let's say I had 10,000 shares of NVIDIA or any tech stock out there, I would have a stop loss at 171 or 171.68. And if it broke that, then yeah, sure, I lose $9. Right? If I had 10,000 shares, it's $9,000 that I'd lose, right? If I had 1,000 shares, I'd lose $900. Be okay losing $900. What I would not be okay with is if the market cracked and crashed and cratered and fell down to here or here or here. What I would not be okay with is noticing that there is market structure that is showing me, that is saying, hey, look, there's a selling opportunity from this high to the base of my right tip here. And that is going to potentially push down to 143.20, right? I would rather save myself with just losing $9 than lose a whole lot more. Does that make sense? Yes or no? So not a lot are performing right now. And why? Well, I don't know if I talked about this here last week or if it's in one of my videos. I can't remember where I brought this information up, but there's a little problem happening right now. So one, Stargate, right? We have Oracle, OpenAI, and SoftBank are all arguing about what's the function's going to be. Oracle also has paid and prepaid and ordered all of these materials for another data center. And then OpenAI came in and said, actually, we're not going to go with that data center because your chips are going to be old. We're going to just go with another one. And now Oracle's on the hook for all of that stuff and they have to, sell it to somebody. So I'm sure like Microsoft or somebody's going to step in and be in there. I'm not worried about that. But how many more times does that happen before we do create worry? Then this circular financing thing is really coming to a head because NVIDIA, who was supposed to put in $110 billion into this latest round, they put in like 5 or something like that and said, we're still working on an agreement. We're still working on an agreement, right? So that is the big thing for Joel. That is a strategy, but yes, you would. Let's say in the event that this tanks, and both bears fall out of windows, right? So selling covered calls could absolutely work, and you would retain ownership of the stock, but I don't like to give away profit. That's just me. I know, maybe I'm weird, but hey, 11 years haven't had a losing year, so pretty good, I'd say. um, with our fund. So that's this is a piece of market structure is showing me that yes, there is downside risk to Nvidia. And guess what you see when you look at AMD? Guess what you see when you look at SNDK? Guess what you see? The only one you're not seeing it really with is Micron. But even then, those two are looking the exact same. And there is some issue as well with memory, right? All of their memory stuff is being bought up by data centers and ordered by data centers, which is great. But now it's impacting computer production, and people are going to need to upgrade their computers. And so that's just going to make Apple and Dell and all of those companies more expensive, which raises the price for consumers. And then the other simple fact is we're not seeing the impact of AI on the bottom line. Companies are reporting about a 1.5% increase in production and profitability. 1.5% increase, right? In production. Let's see. No, it's 1 to 5, Dan, 1 to 5. Okay. Now, here's an even bigger thing with that. So when I looked at some news here today, let me see if I can find it again. Here, why don't we do this? META. I know it's on this page. Here we go. So Meta is reportedly considering layoffs that would affect 20% of the workforce as it seeks to offset AI costs. Wait just a second. Did they just say they're going to fire people because they need to invest more in AI? Interesting. 20% of their company. Square said they're getting rid of 40% of their company because of investments in AI. 40% of it in their company, right? So it's just, it is just a very, very interesting play. And that, Dennis, is exactly what I was going to go into. So we're not seeing the returns from AI and tech and all of that, but we are going to see returns from a different sector. And it's exactly what Dennis talked about, which is oil. And we're going to talk about a couple of those stocks as well. But be careful with the tech stuff. Okay. So that pretty much takes care of NVIDIA. I'm just going to highlight a few of these. NVIDIA, Micron, SNDK. We talked about Meta. Meta would probably look. I will say this: if Meta does fire 20% of their staff, they're probably their value earnings per share and their revenue would go up because labor is the most expensive thing, right? And AMD we looked at. So that takes care of about 4 of those. Let's jump into PPTA really quickly. Okay. PPTA really, really quickly. PPTA. Now, we've talked about PPTA. I've talked about buying it. We've talked about buying it down here, and then it shot up here in March and made some money, got out of it, pulled back. And you know what? I believe that this stock is going to be extremely, extremely valuable. As a matter of fact, guys, I'm just letting you guys know there's going to be a newsletter that's going to be coming out from me again. Another one it's going to be called Energy Watch. And when we release it, you're going to be able to get like my oil and gold outlook, as well as my top 5 stocks in Energy Watch. I'm going to just go ahead and tell you one of them is PPTA, right? One of them is PPTA. And the reason why PPTA is an interesting play is because isn't just their gold mining, which they do have a great gold mine that is producing and all of that, but they also mine something, and I know I'm going to get it wrong. I think it's called it's a weird substance. I think it's antimony or something like that. Hold on. PPTA, ANOMITY. Yeah. Antimony. That's it. They own the only mine in the US. Now, what is this stuff and what is it used for? It's used for weapons productions, munitions productions, ammunitions. It's used in defense. It's used to build data centers as well. And what don't we have a lot of right now that President Trump is asking and urging defense contractors to build is that they're asking to build missiles. And you know what? They're going to need to get this from somewhere. Previously, we were getting it from China. China isn't selling it to us right now. So ramp up their production, and they have the only mine in the entirety of the United States. So do you think this stock would benefit? I do dare say yes. Now, right now, the stock is sitting at $29.76. Is it a good buy at $29.76? I believe that if you are going to buy it now, it would be a good buy in this stock right now. However, here is your downside potential risk here. Your downside risk would be $2.49 to rally up to 44.08 is where I think this stock goes. Okay. This is one of those stocks that I do think is going to be a big benefit to people. Now, I will say, earlier I talked about investments that you can invest in and never lose, wealth protection and things like that. A couple of those tools that I use all the time, are centered around insurance and specific types of fixed index annuities. Jonas and I had a great session earlier this week and talked about it. Nalini and I, VJ and I, it's not your grandma's investment types. Okay. And so what I want to do, I'm going to send you guys a Calendly link really quickly. And what this will do is let you guys book time with either myself or somebody on my team. And this way you guys, if you want to find out more information, and there's something for everyone here. There's stuff that has automatic approval for everyone. There's stuff that, yes, there's minimum requirements. There's stuff that there are specific other requirements that you may need to meet, but we don't know until we have the meeting. And that thing, people think, oh, nobody invests in that. Do you know that 86% of all life insurance and annuities are held by the top 10% of wealth holders in the United States? Because of its way to pass on wealth without going into probate, without taxes, without extra lawyer fees, and the protection that it provides. Imagine if the market did do what the Benner cycle predicts and drops by 40, 50%, and your retirement doesn't lose a penny. That's why I do what I do. It's because I like to help people, help and protect people. So book a meeting with myself or Brent. We'll be glad to help you if we can. There's that link, and then I'll get you another one if you would like. This is like directly to me. But my calendar these next few weeks are busier than a one-legged man in a butt kicking contest, to say the least. But I will gladly meet with anybody. Carrie, absolutely it is. Right? Absolutely it is. So, look, I just want to ask you, do you think it's better to protect your wealth before a crash or after the crash? And when is the best time to protect your family? So you can either book time with me or keep waiting, right? You can either book time with me or keep waiting. Freedom, most people don't make wealth during the crash. They make wealth after the crash. And the tools that I have reinvest at Lowe's, not at Home Depot. No, I had to do that. I had to throw that in there. That good old dad joke in there. So always reinvest at Lowe's, never at Home Depot's. Okay. Jerry, absolutely. And there's several things that we could do. Okay. Priyanka, perfect. Thank you so much, guys. You book time with us. We'll gladly be here. The second link is directly with me. The other link will be with myself or Brent, because I know my calendar is absolutely wild. And even then, I will tell you that if a webinar comes up or something that I missed on my calendar happens, I'll have to reschedule. So just give me some grace with my schedule. There's a lot happening and goings on these days. So that's one way. Let's see. It's the nicely. Really? I did not know that. Laughing over Lowe's. I love it. All right. So let's go through a couple of these stocks. Lululemon is another one. We see it at a low 157.78. Guys, still have this market gap here that we're going after. Still have my big gap here. This did drop mainly because of this whole tariff craze. They consistently beat earnings. There's been one time that they did not beat earnings back in 2020. And then the other thing I'll say is that I've seen Nike beat earnings. I've seen a lot of clothing companies and stores beat earnings. Why would they be any different? So I'm not worried about it. I'm still in this stock, still holding this stock. Yes, we're down. It's okay. Okay. UNH, we'll look at that really quickly. It's the little engine that could. Guys, I tell you all the time, if there's no better example than what you see here, okay? There is no better example than what you see here. UNH, I say this all the time, right? Bulls climb stairs and bears fall out of windows. And bulls will climb stairs and then a bear will fall out of a window. And that's a pure example of it. Okay? That is the best concept that you guys can, if you leave with me with nothing else, just make sure you do that. That is an amazing concept there, right? With that, hey, there's opportunity here. Know that this opportunity is still coming. I'm still at my exit's going to be, I'll probably close another portion of my position at 346, then wait for the next pullback. And I expect them to beat earnings when they report in April. So I'm not too worried about that. Okay. Let's see who's running this zoo. I love it. Let's jump into, so PPTA. I'm going to add this and we're going to call this 3.15.26. Also, guys, I am working on something where I can release some of this. I just have to go through legal stuff before that. So let's see, 44, and then I'm going to say 100. but I just have to make sure of compliance reviews, especially with financial licensing and stuff like that. There's just bigger risk and fallback on me when it comes to this stuff. So I am working on it. Okay. I am working on it. And this may be a dashboard that I end up having to charge for, because if I charge for it, that means that there's a transaction base there that I can always, it protects me a little bit. So it wouldn't be much. You know me, I like to do things and give out as much as possible. But I would have to. And then also there's hosting fees that I have to pay. And I mean, I'd be a dumb business person if, you just took all the costs and gave everything else away. So just be aware that this may turn into something soon. Let's go AAOI. AAOI, I saw this spike up. Somebody actually talked about this in a webinar, right? There was a buy here on with hedge fund trender on 44.45, shot all the way up to 126. Now it's pulling back. I do believe it's going to pull back right into this gap right here. And then there is a second gap as well right here that it could fall back into. If this does become our fractal low, to the left, to the right low, look for it to go back to 111 before falling back to 72 or again to 59, then back up. Fastly, that is a stock that I have been in. I have been in for some time. Fastly, it was a very interesting thing that happened with them. Like if you use the internet, you needed to use Fastly. And now they had this massive drop, flatlined, and now they're roaring back. But I would be let me just say how I would do this, okay? This big old gap right here, let me just tell you, it's going to get filled. That's the technical term, big old gap. BOG is what we call that in the technical world. That is going to get filled. What I would do is I would have, if I was in this position, which I do have positions in this, I'm going to just trail the market. I may trail it by $1 or $2, right? Because I would rather lose $2 than lose $30 a share, right? I can be okay losing $2 a share, losing $30 a share, and I'm going to be really cursing somebody out, because that's just an idiotic move to do, right? If you have a trailing stop, hey, yes, you get stopped out, and nothing to stop you from rebuying in or something like that when you see the market go for a low. But we're seeing on market energy, we're seeing buying energy still in, but selling energy is rising, which tells me this is going to turn over and going to turn over quick. Okay, so just be aware of that. Let's go into, I keep clicking on the wrong thing, so I'm going to move it over. Try to do that. AAOI, we did. ASTS. We talked about this, and it's done exactly what we said. We said fill this gap, may go a little bit higher, retest. It did, and now it's pushing back down. 67.53 is still where I look for it to go to. Not seeing it go any higher. Let's see. Freedom, I would hope so, because he and I, we learned from the same place and the same person, and we worked together for 15 years. I was actually his boss at one point in time. And even though his dad owned the company. But no, so yes, we do our fibs the exact same way. So we grew up in when I first joined the company, he was just became an analyst, and I've seen the evolution of him over time, the emotional maturity, the trading maturity as well. So we've kind of grown together in the market, and we're very close. I actually played golf with him this weekend. So Josh Martinez, Vicky, he came into the webinar 2 weeks ago, I think it was. 2 weeks ago. So let's keep this rolling. Circle is not going to rise until we see Bitcoin consistently rise. We are seeing Bitcoin up again today, now over 73,000. I know it's the reason why that we're not going to see this rise until then is because, yes, it's independent. Yes, it's a central bank. Yes, our central, like a central bank currency, USDC. But it is still like it's still considered in the crypto realm, so people still view it as that. Do I think Circle is going to pull back again? I do think this gap will get filled at 63 bucks. However, let's see, we still got some potential running to do. Market buying energy is failing, so we're seeing selling energy come in. So I anticipate there to be a sell. I think it's going to fall back to 85. It may push down to 61, but 85 is my target on this. I don't see this pushing too much higher than where it is. You have a pretty good level of resistance and pretty good level of support, and then the next level there. That's what we're looking at. Oh, okay, good, good, Vicky. Yeah, he and I have worked together forever. I worked with his dad for 2 years every single day. And then that's where I cut my trading chops, to say the least. So Circle, I do think it ultimately goes, but I look at this. So gaps always fill. I try to stay away from the word always, because there are instances where gaps don't get filled, but there's something called market efficient market theory, I should say. And it basically, one of the tenets in it is that the market reflects all available information at a given period of time. Gaps violate that principle, right? Gaps violate that principle. So when we see a gap in a market, we know that somebody knows something that nobody else knows, and eventually something will happen to pull that market back to it. So you can look at gaps as a period of inefficiency in the markets where we're probably going to go for, it's probably going to get there. I wouldn't say, I just thought of the funny line from Anchorman: 60% of the time it works 100% of the time. So we'll go with that. How about that if you need a percentage on that? Okay, let's keep this rolling here. ULY. ULY. I really don't do penny stocks. I don't really mess with penny stocks. I just don't. It's just, yeah, I wouldn't see this move in either direction. So I wouldn't see this move in any direction there. So Ronnie, just book a time with me and we'll talk, right? I like to help as many people as I can. There's stuff that I can do for people at $250 level, $100 level, and there's stuff I can do with people at a $5 million level. Like, it doesn't really matter. So exactly, pump and dump is the exact word. And I know people in that penny stock promotion area of the financial world, and ever since meeting them, I just stay away from them. CN, earnings. I'm seeing buying energy leave and selling energy come back. We do have a big gap down here. I don't think it drops $300 or $200 down to this $100 mark. I do think that it does correct a little bit. Right? You can't have a parabolic move without having some pullback. So anywhere in this area, I would consider buying this, like right in here. That's where all your levels of support and resistance are. There's a small gap that we could fill at 318 before bouncing up. So be on the lookout for that. But there is exactly, I do Sunday evenings. Give up time with the family for this every Sunday evening. So speaking of, I have not decided yet on Easter. I have family stuff. So if how many of you, if we held the session on Easter, would show up versus not? Type in a yes if you would show up. Type in a no if you wouldn't. I don't think I can do a poll on the fly, can I? Yeah, I think I can. Let's see, Easter. I'm gonna do a poll so I have it down. Yes. No. Save. Launch. Okay. Answer that poll for me really quickly. I'm going to be away with my family. And so I'd have to drive like 2.5 hours or an hour or so to get back. So, and of course it's 50-50 thus far. It's literally I swear this is like the elections when they say, "Oh, this person's going to win." With a 51% of people say they're going to win with a 2% error of margin. So you have no clue. So right now it's 50-50 and half of you guys in here have participated. So doesn't swing either way. So I may just end up taking it off because so many of you are on the fence either way. So maybe I'll do a video or something and make sure we get it. I'll share it via Discord. So it's literally 47 and 53%. Okay, perfect. So let's see. All right. We'll look at doing that. Daryl, thank you so much. And this is potentially a big Easter, to say the least. So let's see here. STRL. Sterling here. The downside fib is saying we should go here. There is a small gap at 326. The upside move is to there. Get rid of that one really quickly. I believe that this is like a stay out of until we break a counter trend line. Like if we break above this, then we can start buying this up to 570. But if we don't break above this, then we would look for a sell off. I do believe this is going to push down. Let me just say that, right? I think that we would push down. I think what we're seeing here is what's called a King's Crown formation, which is a left tip, center tip, right tip. This is your base of your right tip. The downward fib move would go from the center wick to the base here, and that would tell me that we should fall to 313. It is also has not touched this 200 period moving average in 330 days. 330 days. So, yeah, we got a blue dot, but red is over blue, which is the sell zone, and selling energy is in. So I'm looking for this to at least come down here. Okay. Jonas, we did look at MU. We said stay out of it. Right. We did say stay out of it, or, take some profits. If it fails to make if it fails again to make a high, I would just stay out. Like we have not made a high in this since January. Really, right now, our lows were the same lows here. We're making equal lows and equal highs. It is just consolidating. I think that this pushes back down. I think they are going to beat earnings, but their guidance is going to be worse, and then we're going to see them fall more than likely. So I think that's what you would more than likely see here, right? Is that they would have better than expected earnings, but forward guidance won't look as pretty. And so we would see a potential market correction. The other is, how long has it been since we've touched the 200 period moving average? Well, the last one was right here, and it is 284 days. Market doesn't do that too long. And earnings on Wednesday, yeah. Jonas, I think it'll be like NVIDIA, where they had a great earnings, but then they fell because of forward guidance. Okay. It should touch the 200 period moving average every 200 days or so. But if it gets exhaustively, like I say, I give it like a 10 to 20% above it. And if it's exhausted that, then we're more than likely going to see a move down. We'll more than likely see a move down. So that is what I would look for, is that a little bit of like, hey, good earnings, probably will come back down to 387, and then it's just going to sit sideways for a period of time, Jonas. Let me go through a couple more of these, and then I have to run. Let's look at BlackRock. BlackRock's an interesting one. They have been buying up gold, and they also, they came out with their capital controls. Did everybody see the video on that? Yes or no that I did? Did you guys see that video? Yes or no on that? Okay. Good amount of you did. Some of you didn't. If you didn't see that video, I'm going to send you the Wealth Watch again. Sign up for it. Okay. It's free. All right. I did a video on BlackRock last couple of few last week sometime, maybe the week before, when they announced that they were not letting people out of their fund. They said $44 billion or something like that they had um in this. They were basically one of those private equity they have a private equity division. Sorry, I have something on my eye that is bugging the mess out of me, and okay, there we go. And it wasn't just my finger that was in my eye that was bugging the mess out of me. But their private equity division, basically, they invested in a bunch of software companies. As you guys know, some of these software companies are no longer able to service their loans, and so that hurts the bank. And then there was a run on capital when that was found out. Right, Blue Owl was one of the companies that got really. I think OWL is their ticker. Like, check out Blue Owl Capital. Peak was $26. Today it's at $8.75. Things are so bad at Blue Owl. They were supposed to be the backer of OpenAI's data centers that they're putting in, and saying they were supposed to guarantee the rents, but they can't guarantee the rents anymore. Okay, they can't guarantee the rents anymore. So because of that, they fell down. Now, I do like that they're only like, I don't know, 50 cents from their lows. So I like that. We may pick up a few shares in Blue Owl because maybe they recover, but private equity markets are not looking good. And that's where BlackRock is taking a hit. BlackRock is below the 200 period moving average, and the 50, and they're in death cross territory. And BlackRock owns 44% of the stock market. So what do? If BlackRock falls and they lose capital, then the market really is going to fall. All right. Now, could BlackRock ever fall or fail? Well, let's talk about the CEO of BlackRock, Mr. Larry Fink. Finkenstein, if you will, which is his real name. But good old Lair Bear, he was the one who helped create the mortgage-backed security and helped package the D plus loans, and helped create the '08 crisis when he was the head of a bank. And then as head of a bank, he decided to go where the TARP money knew. And then yeah. So has he ever failed us before? Well, you tell me. So when they hit turbulence, they change the rules. I love that. Bryce. So this is, there is a catastrophe. There is a major issue. We did just fulfill this fib. So perhaps we see this pull back up here to 1019 before it drops down. Could it go as low as 756? Yes, absolutely. Absolutely. The gaps in this chart that are still here, one is right there. One is right. Oh, messed that one up. Got this magnet tool on. There, and there. Those are the only three gaps on the entire chart, daily chart. Could this continue to fall? Absolutely. Absolutely. So this is not in the private, it's a big opportunity there. So, we'll see. I don't think this is done falling yet. I think there's a little bit more ways to go before it falls. Do I think it fails? Absolutely not. Way too big to fail. And
but I do see massive opportunity in BlackRock. And yes, we will be buying it. And they are actually one of the companies that you can invest in and not lose zero. There's a way to invest in gold, BlackRock, real estate, S&P, NASDAQ, all of them, and lose zero. That's why definitely want you guys to book appointments with either myself or with the team here. So if you need anything at all, please let me know. With that, I got to wrap it up and get to my next meeting. Um, and I will more than likely end up canceling the Easter session to spend time with family. And absolutely they would get bailed out. And so I will see. Um, I will definitely see you guys in webinars this week as well as next Sunday. And then if you need anything in the meantime, please feel free to reach out. Use the Wealth Watch. Most of you have my email and stuff like that. If you need to set appointment time with me, um, here is the link to do so. And remember, this appointment time isn't about trading. It's more about investment and asset management and protection and protecting your family. So, I look forward to seeing all of you guys very, very soon. And Arun, I know I owe you a call. We need to connect, my friend. We need to connect. I know we've got to connect on a bunch of stuff. Just give me a call anytime this week, Arun. Call me and I'll make sure to make time for you. VJ, look forward to talking to you soon as well. I'm glad that you are back. And Discord is absolutely active. You can jump in it at any point in time. If you need anything at all, let me know. And I look forward to speaking with you guys next week and seeing you guys in webinars all this week. Have a good one. Bye for now.